What's up, guys? Welcome back to the channel. In today's lesson, I'll be giving you updates on entry confirmation. Understanding how to effectively enter trades is crucial for success. As I mentioned in last week's lesson, I said two major challenges traders face are determining optimal entry and exit points. So today we'll be focusing on the entry points. Following my recent post on Telegram, where I said you should suggest a topic or a concept we'll be covering in today's lesson. Many of you requested guidance on entry confirmation. Approximately 50% of the students asked for clarification on this particular topic, seeking reliable methods to confirm trades and to have a precise entry. Now, to address this, I will provide a comprehensive overview of entry confirmation techniques, updating you on the best method to enter your trades. And before I dive into these methods of confirming trades, it's essential to understand the importance of time frames as well, because understanding the particular time frame to get involved in trades is a crucial part. To get involved in trades, you need to identify the optimal time frames for entry. Having a solid setup is just the starting point. This is part of the things I outlined last week. You must also consider those specific time frames to get involved in a trade, which will help you become successful in the financial markets. Another thing a lot of you complained about is missed trade opportunities. A lot of you complained that while you wait for the entry confirmations, you miss a lot of trades. So we will explore a practical tips to help you stay on top of your game and to minimize the rate you miss your trade opportunities. This is what we'll be covering in today's lesson. About 3 years ago, when we all started this journey on this channel, Born to Trade, then I usually tell you that I can't take any trade without an entry confirmation. If I see a trade setups, I don't take it without having confirmations to take a trade. But one thing about life is refinements. We do what we call refinements. Once you grow as a human, as a trader, and as a person, you do refinements in a lot of things you do. When it comes to my entry pattern, I've done a lot of refinements. As a matter of fact, I have a lot of entry strategies. The students in my VIP can attest to I have a lot of entry strategies which I teach them. But in today's lesson, I'm going to teach you the best, one of the best actually, for those who has been using the entry confirmation. If you've been using the entry confirmation pattern and you've missed a lot of trade today, I'm going to update you on the entry confirmation pattern, and I'm going to give you a pattern which will help you stay up in your game and stop missing trades, right? Another important thing is that this particular entry pattern has high probability, okay? Let's jump straight into it. Now, when we talk about entry confirmations, we usually do analysis on the higher time frame. And after the analysis on the higher time frame, I always advise that you should drop to a more lower time frame to find entry confirmations, because getting involved from the lower time frame has advantage. But just like every other business, anything that has an advantage also has its own disadvantage. When we get involved in trades, using entry confirmation, what I usually teach is once we have a key level, because this level we have right here is what we call a key level, which could be fair value gap, supply and demand zone, and all that. Is a key level, and now price has returned to your key level. Now for entry confirmation, that is your lower time frame entry confirmation, which we've been using for years. How we do this is once price hits your point of interest, all you do is to drop to a lower time frame. Let's assume this analysis is on the 2 hours or on the 1 hour time frame. So once price hits your higher time frame level, you drop to a lower time frame, which could possibly be your 15 minutes or your 5 minutes time frame, and you try to read the structure on that particular time frame. When you read the structure on this particular time frame, this is what you discover: price breaking structures to the downside, which confirms that we are in a downtrend. So when you confirm that we are in a downtrend, this is your lower low right here, and this is your lower high. Now, what I teach you is you should wait for price to shift in structure. So when you understand that this is a market structure shift, this is where you drop to find your entry level. And most times I advise you select the extreme level where you could get involved. And what you have to do is once you select the level, you wait for price to return, tag you in a trade, and this is your confirmation entry. Now, a lot of you who has been using this particular entry method have missed a lot of trades. As a matter of fact, even 3 years ago, when I teach about using the lower time frame confirmations, I tell you that I miss a lot of trades. I said a lot of times, I miss a lot of trades, and this is what you people didn't note. You were just trying to use it without acknowledging that if you want to adapt this trading method, you're going to miss a lot of trades. This is what you all didn't understand. This is exactly the same thing for a bearish example, where price return to a key level, and as it returns to a key level, we try to identify what price is doing on the lower time frame. Now, on the lower time frame, you see price breaks above this high, mitigates the key level. We have a shift in structure where price breaks underneath this low. Now that price breaks underneath the low, forming a market structure shift, which signifies that price is possibly going to change in its trend. How are you going to get involved? You select your extreme supply in this case. Once you select your extreme supply, you expect price to return, mitigate your level. I'm going to have a continuation. We've been using this particular pattern for a very long time. But today, I'm going to drop updates on this particular method. Since last year, price has been finding it hard to offer good entry confirmation. As a matter of fact, price might just maybe react from a fair value gap and continues. Sometimes price might come very close to the level which we look to get involved, and it's a missed trade opportunity. So when I discovered this, I had to change my entry method. That's just the truth. And I apologize to the YouTube community for not informing you all that I changed my entry method. I've been seeing questions about that, but I didn't update you. The only people who knows that I changed my entry method was my VIP students. Now, I use entry confirmation just 20%. And then the second entry method, which is the aggressive entry method, I started using it about 70%. Then 10% is other entry method, which I see in the market. But today, I'm going to teach you a very simple and easy entry method, which has about 70% occurrence in the market. This entry method has 70% occurrence in the market, and it's very simple. Now, let me explain it step by step. And after giving you step-by-step explanation, I'm going to show you real chart examples. Those particular setup I shared in the free community, that is the free Telegram community, I'm going to show you examples on that. And the recent trades which have been taken, which you normally see me share the screenshots on my social platforms, we're going to look for that entry on those setups. This video can get up to 30 to 40 minutes because seeing is believing. I'll use recent price actions, trades that share to the VIP to break this down. And I'm going to use the recent trades which I shared to the free community, which offered good results. I'll still use it to show you how you can use this entry confirmation. Now, this particular entry method, we're going to name it breaker entry. Okay, we're going to call it a breaker entry. And after now, I expect you all to backtest this entry method and give me your feedback. The same way you suggested I should talk about entry should be the same way you send your feedback. So I just want you to know that what I'm going to teach you is what works in the market. This is an update to the lower time frame entry method, where we'll be using a breaker entry. When we move to the price charts and we discover that, okay, price is at a key level and we've been able to identify the break of this low. Most times, what we usually anticipate is the shift in market structure where price takes the most recent high. But in this case, we're going to change how we see this price action. Yes, we're still going to try to identify a market structure shift, but the most important thing and where we're going to pay the most attention is trying to understand that we have a zone right here, which is a supply level. So this is a supply level, and most times what we know is that once price hits a key level, the probability of a supply level very close to the key level, the probability is going to drop and it's likely going to fail to hold price. Once price hits your key level, try to identify the most recent supply level. This is actually a demand level. So since price hits a key level of demand, try to identify your lower time frame supply level, the most recent lower time frame supply level. And you're going to be doing this on the lower time frame. You can do it on the 15 minutes or on the 5 minutes time frame, provided your key level is on the 1 hour, 2 hours, or even 4 hours time frame. But if you are using the maybe 15 minutes, 30 minutes as your higher time frame, this means that this particular entry confirmation, you'll be looking for it on your 1 minute or even those seconds time frame. Once you identify this level as your supply level, all you have to do is to wait for price to break above the supply level. And once price break above the supply level, just extend it and wait for the retest. You just wait for the retest of the supply level. Now, once price retest supply level, that's your entry. You enter from the retest of the supply level, place your stop loss underneath the lowest point. Okay, this particular entry point has its own disadvantage. What's the disadvantage of trading with this particular entry point? Your stop loss is going to be large, okay? But believe me, it's going to minimize the way you miss trades because you're not going to be missing trades as long as you're waiting for confirmation. This lesson is specifically for those who don't want to approach the market aggressively. So get involved from the retest, and that's the best entry point. You're not going to miss trades again, and this is what we call a breaker entry. Take your time. I'm going to give you live examples, which is going to boost your confidence. And backtesting it in the market is going to give you more confidence to approach the market with this confirmation. Another thing that confirms that this is going to hold prices, you actually had a shift in structure, which confirms a change in the market trend. This is exactly for this, where we have the break of this high, price tapping into a key level of supply. And since price tapped into a key level of supply, all you have to do is to drop to your lower time frame and try to identify your lower time frame demand level. Now, this is your lower time frame demand, and what you have to do is to wait for the retest of this demand. So this is what price is going to look like when it breaks the demand level. So all you have to do is just to wait for price to come back, retest the level. So once we have the retest, you just have to enter from there, stop loss above this particular high. And the next thing is just projecting your profit target and expecting price to get to your target. The next question you're going to ask me is this: why don't we place our stop loss underneath the lower time frame supply level? Placing your stop loss underneath your lower time frame level is also nice. Some people might advise you to do that, but to be on a safer side, doing it this way is the best, because in some cases, price might not just mitigate the level and continue. It might decide to pull back into a fair value gap. And in some other cases, it might decide to get to that extreme level of demand. So to be on a safer side and not to gamble with your money, because you are risking your money and losing your money easily in the market, is going to be painful. This is why it's advisable to place your stop loss underneath the low and wait for price to react. I hope this makes sense to you. Now, there are some scenarios where we might see something different, where we're going to have something like this. Sometimes when we explain it with the charts and when we explain it with the sketch, it's not usually the same. So we might see something like this where price might play around before we get the break. So if you see something like this, and have it in mind that price is also at a key level, right? Don't just trade this randomly, trade it from key levels. So in this particular case, this is lower time frame. Price broke structure to the downside, mitigates our key level, and we had our lower time frame supply in this case. Now you see price came to mitigate this lower time frame supply. It played a little before it failed to hold price. So if you see something like this, it's still valid. All you have to do is just to extend that lower time frame supply, here being your entry level and your stop loss underneath the low. Now, all you have to do is just to wait for this pullback. Just like I explained, wait for price to pull back, retest, and you take your trade, right? And some people might actually decide to enter from a flip zone, here being their flip level. But just focus on the breaker level and forget about the flip level, okay? I hope this makes sense to you. Let me show you live example. So here is the free Telegram community. This was the particular setup which offered good results before I asked you all to test me the topic or the concept you would want us to cover. So this is actually the trade setup when it was shared. This is the trade setup before it's played out. So I'm going to use this as the first example. So you know that I just teach what works in the market. I love teaching with evidence. So anytime you see me teaching you, just ask for evidence with a recent price action. I don't manufacture charts. So let's see it on the price charts. All right, so this is GBP JPY 2 hours time frame because this particular setup, I explained it last week. So during the last week lesson, this is a brief explanation of what I taught you guys, having a very valid point of interest right here because we had a liquidity sweep right here. Over here, we have price building more liquidity, which is a smart money trap. Price manipulates, tags into our zone, a good reaction. Now, after that particular reaction, we have another entry where price came back to retest the second zone we have over here. So this was where the explanation ended last week. Now, this week, I was able to spot good trade opportunity, which I shared to you guys, where we have another point of interest over here. This is a very good point of interest. And why is this a valid point of interest? Over here, we have a liquidity sweep as well. Price takes liquidity underneath the low. Secondly, price builds more liquidity in form of accumulation around this particular area. So let me zoom in because this is where we pay more attention. So price builds this liquidity, and to back it up, a valid break of structure. So this was the trade opportunity. Now, all we have to do is just to play price forward to get to our zone. And once price gets to our zone, this is where we drop to a lower time frame to find the breaker entry, because the breaker entry is what we'll be looking for in this lesson. So let's play price forward right now. Now, price starts into your point of interest. All you have to do is to drop to a lower time frame, like I said. So let's use the 5 minutes time frame. So here's the 5 minutes time frame, and if I try to zoom out, you see price starts into our zone. Just like the way I teach, I said all you have to do is to try to read your lower time frame structure. Now, reading your lower time frame structure is a break of structure, which indicates that the lower time frame is still in a downtrend. And over here, you'll be able to spot price breaking another structure. So after price broke this structure, printing this low, this was the pullback right here. Price pulled back from this high and drops again. We have another break of structure down here. Now, what I said you should identify is your most recent lower time frame what supply level. And if we were actually using the normal entry confirmation, we would have waited for market structure shifts around this particular high. But in this case, that's not what we'll be looking for. We'll be looking for our lower time frame supply level. So this is our lower time frame supply level. What you'll be waiting for right now is for this level to fail. You have an expectation that the lower time frame supply level is going to fail. If it doesn't fail, there is no entry for you. Disregard the setup. Okay, so let's play price forward and expect that the lower time frame level is going to fail to hold price. Now you see, when price got to this level, we had a little reaction. You see, price reacted a little before it failed. So now that your level failed, you just have to extend and do what? Expect the retest. Now, when we use entry confirmation, what we'll be doing is, after we had this shift, we'll be expecting price to get to this extreme level. But these days, price hardly gets to the level. And I will still update you guys if price starts giving us a lower time frame confirmation. If price starts respecting the lower time frame confirmation, I will still give you an update. But for now, that price find it hard to get to the extreme level, let's focus on the breaker entry. Now, all you have to do is to place your entry around this high, waiting for the retest of this failed supply level. And another thing I said is you should place your stop loss underneath this low to be on the safer side. Placing your stop loss here is nice, but to be on the safer side, placing it at this particular low is the best thing to do. Okay, so let's press price forward right now. See, price came back, give a good retest, and it starts to move away. Okay, If you can see that, is the 5 minutes time frame, and after the retest, you see how price moved away to the upside. See, very, very good reaction, a very good reaction. Now, this was the particular trade we won. So I love using recent price actions, just like I said. Price moved away. Maybe let's go to the 2 hours time frame so we play this forward faster. Now, price was actually able to get to the external range liquidity, right? Price took this external range liquidity. Let's see. So this is the recent price action. I actually took my profits around this particular area. So this was a very good trade opportunity, and I hope this first example was very clear. Let me show you another example. The next one is going to be this particular one on card CHF. This is the setup, and this was when the setup was shared. So this particular setup was shared on the 17th. This was around 21st when price got to our target. So let's see that. Our advanced smart money mentorship is still running. I trade smart money concepts and I teach smart money concepts. So if you have interest in enrolling for a mentorship where I'm going to guide you on how to learn all the concepts and how you can find consistency in the markets, this mentorship is still running. So in a mentorship, if you enroll, you're going to have access to our advanced smart money course. I'm going to give you access to the course, and you're going to be part of our weekly chart breakdown. If you've been following me for a very long time, you know that I and my VIP students, we always analyze and break down the market. You're going to have access to the VIP support group, the group where you see me sharing the trade opportunities, and you see some of the students are allowed to share what they see in the markets there as well. You're going to have access to our premium possible setup. So on our main VIP, that's where I share our main trading opportunities, the trades you can approach and trade. Now you're going to be part of our live sessions, okay? You're going to be part of our live session. So if you have interest in enrolling for this mentorship, it costs $216. And if you're actually interested in enrolling, you can click on pay now. This is where you can make your payments, and have it in mind that once you complete the mentorship, you're actually going to have your certificates, right? So these are some of the reviews from our students. These are the reviews. Now you can go ahead and read up. But if you think you are doing better on your own, you can as well decide not to enroll. But if you think you need someone who is going to guide you, I think you should enroll for the mentorship. So here's that particular setup. I've also used it for a lesson. So this was the zone we marked. So when I had meeting with my VIP students, we weren't confident enough to take this particular trade from this zone, because we also thought, okay, the zone we have right here is still valid. So in order to be on the safer side, decided to place our stop loss above this particular high while getting involved from this particular zone. That was the thing we did. So we just have to play price forward and see how it reacts. So this was the point price got to our zone, right? Stars into our zone. Now, the simple thing I say you should do is to drop to a lower time frame for your entry, where I said you could possibly use the 15 minutes or the 5 minutes. So we've used the 5 minutes for the last one. Let's see the 15 minutes in this case. Now, on the 15 minutes time frame, what you can clearly see is that we had the mitigation of this zone, and where is the current low that broke this particular high. This is the current low that broke the high, and where is your recent demand zone, because you're going to be identifying your lower time frame demand zone in this case, and you have an expectation. Your expectation is that this demand has to fail. So let's press price forward and see if demand zone will fail to hold price. Now, the demand zone fails. So since the demand zone failed to hold price, all you have to do is to wait for the retest. Where here is your entry, and you're going to be placing your stop loss above this particular high. Now playing price forward. You see, immediately price retest the level. I hope you can see how price retest this level immediately. I hope you see that. So this is what I've been talking about. So to do this, you need to be alert. And for those who fail to get involved from the first retest, this is price giving you a grace while it came to rebalance the inefficiency we have here, tapping into the level again. So playing price forward now. So this is exactly what I said. You see, price mitigate the level and starts to drop. Now, imagine you placing your stop loss above this particular high. You see, price also tagged you out and reacting to your direction. So this is why I said you should always place yourself first, be on the safer side, and expect price to drop. So let's go to a 2 hours time frame to play this forward so we don't waste time on the lower time frame. So now playing this forward right now, see price starts to react. And as a matter of fact, I was able to hold this trade for over a week. I actually made a lot of profit from this particular setup. I didn't go for just 12%. I went for over 5 or about 7 to 9%. I can't really remember, but it was actually a very good trade for me because I was able to hold my trade up till this level. I took my profits when price took this lowest point, because while I was doing my analysis, I know that price is actually going to drop, because if you try to zoom out, this was the lowest low, right? So when I zoomed out, I said, okay, this is the lowest point and this is the right point to take my profit. So I was able to hold my trade from this particular entry to price got to this low, and I took my profits. This was exactly where I took my profits. The day price got to here, and I also shared the screenshots when I took the profits. So playing price forward to see where price is currently. Now price was able to drop a little more and it starts to pull back. So which means price was able to sweep the liquidity at the lowest point, pulled back, and it continued to drop, which means if I didn't close my profit right here, I would have made more. But one thing you need to learn from trading is you will always leave money on the table. Okay, you can't take all the money. If I was actually able to hold to this point, I will make more. But I already made enough. It was enough. So it's a good one. So I think these two examples has been able to convey this idea about entry confirmation using the breaker entry method. Let's see another example. I'll still use a chart from the VIP. I'll use a chart from the VIP to explain all these concepts. So this was a setup on USD where I went for 4 hour right here. And this was a trade opportunity when it was shared. It was shared on the 3rd of February. This was when price was offering about 3% on the same 3rd of February, and price got to a target on the same 3rd of February. Well, this was actually a good one. So let's see on the price charts. So here is the USD setup. And one thing you will notice is that I'm not just showing you how to get involved using the entry confirmation. I'm also teaching you how to do your analysis effectively. So I already used this particular chart for a lesson where we had the Quasimodo level, right? Quasimodo level, but I wasn't trading from the Quasimodo level. I focused on the liquidity sweep pattern and marking my point of interest because price left a fair value gap, which means that there is need for price to come back to rebalance the level. Okay, so let's wait for price to get into our zone. Then we know the next step from there. Now you see price starts into your zone. So drop to a lower time frame to get an entry. So let's see the 15 minutes time frame. So here is the 15 minutes time frame. Price starts into your zone. And if you will try to read the 15-minute structure, you see price is in an uptrend, breaking structure to the upside. Over here, we have another valid break of structure to the upside. So we're going to expect that price is going to shift in structure and this lower time frame demand zone filling as well. And I said if this demand zone is able to hold price to push price higher, disregard the setup, but if it fails, you have a trade opportunity. Let's press price forward right now. Now price starts to drop, and finally this level failed to hold price. Hope you can see that it failed to hold price. So now it failed to hold price. You do the exact same thing again, getting involved from this level, your stop loss placed above this particular high. So the essence of using this particular entry method is because price has been failing to get to the extreme level where we use our entry confirmation. So since price doesn't do that often in the markets, let's use the breaker entry. So let's press price forward and see if we can actually get involved. See, price comes for the retest, taps into the zone more, and drops. So we higher time frame to see how it plays out. So currently price is dropping. I have to play price forward and see how it gets to profit. So you see price continues to drop and now we have a pullback. Now let's see more example. So these are the recent trades we won this week in the markets. AUD setup, GBP USD card. This AUD card. So these are the recent wins. But let's use one of them. Okay, let's use the AUD setup and see what price is going to do there. Let's see AUDJPY. So this is AUDJPY, the 1 hour time frame. The setup was spot on the 1 hour time frame. So this is a valid zone right here. We have the sweep of this low. Price reacts, breaks this high. So it's a valid setup. Let's just focus on getting the entry. So we're going to press price forward to see how price returns to the zone. So this is price starting into our zone. So we have to drop to a lower time frame to get an entry. So let's try the 5. We've tried the 15 minutes twice. So let's try the 5 minutes right now. So currently, this is the 15 minutes time frame. Price is in our zone. We had this pullback. Price continues lower. So we need price to close right there. Then the supply will be getting involved from should be around this particular area, right? Supply should be around this area. So let's press price forward. Now, this is very nice. Price was able to break underneath the low, closing underneath the low. So moving above this particular supply. This particular supply is very large, but I just had to mark it a little. But in your case, if you're having your analysis, I just advise you mark the full supply. Just this way, okay? This is the full supply level. Now price breaks above the supply. Now here is your entry point in this case. This high is your entry, and this low is where you place your stop loss. And you see, price reacted 1 pip on the net zone. So if you entered aggressively your stop loss on the net zone without adding few pips, you be tagged out. So playing price forward, you see, we have the retest. Okay, price starts to move away. So this is a very good one. So back to the 1 hour time frame actually. See, on the 1 hour time frame, this is where price starts to move away on the 1 hour time frame. See, price continued higher and it was able to break this internal structure. When we had this, I think one of my students actually shared a trade opportunity from this level because this is also a very good zone. So let me delete this. So I'm going to round up with this particular exam. Okay, we're going to still look for another entry. So a student got involved from a setup around this area, marking this level. Let me see. So this was the setup right here where price reacted, right? Then he marks this level and it was a very, very good level to trade from. So let's see. This was when he had the results, but he said he didn't take this particular trade. But let's see on the price chart. Now here on the price chart, here's the trade opportunity where he marked the zone. So what you're going to do right now is if price gets to this level, we try to identify this particular entry method we're trying to update to, okay? So playing price forward, price got to a zone and it's reacting. But let's just try to identify the entry. So here is the 15 minutes time frame and this price action is not too clean as well. So if you want to get involved using the recent entry pattern, I think your supply level is around here, but it's not a valid one in my case. It's not a valid one because the price action right here is efficient. Now, price reacts above that particular high. Now, here's the retest right here. Here's where we had the retest. And remember, your entry point here serving as your entry point, and here's serving as your stop loss point. Playing price forward, price moves away. Okay, so I hope this particular lesson makes sense to you, and I believe you visit your price chart to practice this particular entry method. It's a very good entry method. You won't miss trades like you do while waiting for entry confirmation. But the downside is this: you have a very large stop loss. That's just it. Okay, so go back to your price chart. I've done my part by dropping this lesson. Now go play your own parts by doing the back test and building your self-confidence. I can go on and show you more examples, but I'm already exhausted. So thanks very much for watching this lesson. I hope this was helpful. So if you're yet to subscribe to the channel, try to subscribe to the channel. This is not just a YouTube community. This is a family, okay? Born to Trade is a family. So if you're part of this family, subscribe to the channel and visit every weekend. We usually drop lessons, okay? So thanks very much for watching this one. See you in the next lesson.